Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. On today's show, Polymarket bettors say there's a 100% chance of the Fed ending quantitative tightening before May. Also, crypto analyst predicts rapid rallies for Bitcoin and says stage is set for an altcoin to dominate BTC. And Bitcoin price eyes 200,000 breakout if this history aligns. We're going to go through some other factors that are playing a big role in the crypto market. We're going to go through the ISM. We are going to go through the M2 money supply, and we are going to negate the naysayers and come out with the truth as to where the Bitcoin price is going. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is March 17, 2025, and today we are going to go through some of the core fundamentals we want to look at when dealing with Bitcoin and the crypto market on a whole. Let's jump right into it, and we're going to make this part of our Market Watch and Bitcoin technical analysis. So let's first look at the U.S. manufacturing ISM. So as we see here, comparing from 2015 to 2025 10-year chart, we've got manufacturing way up in 2021, and now you see that we're slumping. So Trump wants to bring a lot of manufacturing back home, and he's well on his way of doing so. So once we see this ISM number jump, then we're also going to see Bitcoin and really the whole crypto market trailing behind, a few weeks. We'll call it a month and a half to 3 months. But as this rises, Bitcoin's also going to rise. Now, another big factor in the crypto sphere is the M2 money supply. So right now, again, a 10-year chart we're looking at on screen. And we've got, if we look at the 2020, we've got a huge jump in the global money supply here. And we are also going to find that right here, we're also going to end up having a big jump in the money supply. Also a bullish tenet for Bitcoin. So we're looking at the US chart here, but this goes globally. We're going to see Europe, we're going to see China, we're going to see the States, we're going to see Japan, all printing more money. Why? Because they're going to have to service their debt. They need debt repayment. They need low interest rates to pay back this debt. And effectively, they need to keep printing money to pay this off. So as this number goes up, and I project we're going to see another, we'll call this it's not even a 45-degree angle in 2020. It's about a, 80-degree banana style straight up. We are likely to see another one of these coming up this year. And again, Bitcoin will follow that path when there's more money printed, there's more liquidity in the market, there's people, the rates will come down along with this. That means more people will have more money and more money to put into speculative assets like stocks and like the biddy. Now let's hop into the actual Bitcoin pricing. Today we are up about 0.5% to $83,500. Ethereum at $1,916. Solana down 2%, $125. XRP down 1.5%, $2.30. Doge down 1.48, 1.56% now to just under 17 cents. Let's check out the crypto bubbles. We've got Pancake Swap up 35%, BNX, which stands for Binary X, 24%. OKB up 8%. SUI up 4%. Pepe up 9%. IMX 3%, HTX 4.5%, and we have today about a 60-40 split between climbers and decliners. Let's zoom out to the weekly, and we have, wow, I haven't seen it this green for weeks. We've got about 95% in the green for the week. BNX up 90%, Cake up 70%. Ton coin up 35%, Atom 30%. And zooming out to the monthly, we still have quite a bit in the red for the month. We'll call it about a 95 in the red and only 5% in the green for the month. Checking out our crypto market cap, we've got Bitcoin sitting at $1.655 trillion, Ethereum $231 billion, XRP $134 billion. Solana, 64 billion, Doge, 25 billion, Cardano, 25 billion, Tron, 21 billion. The total market cap as of right now is $2.68 trillion, with Bitcoin holding 61.72% of that, XRP at 5%, Ethereum at 8.6%, and BNB coin at 3.35%. We are a 32 in fear right now in our crypto fear and greed index. Yesterday was a 30 and last week was a 20 in extreme fear. And there's 1,123 days left until the next Bitcoin halving in 2028 with 161,738 blocks left to mine until that time. You can currently get 1,197 Satoshis for one fiat US dollar. Let's take a peek at our top assets by market cap. We've got gold at 20.2 trillion, up again a little bit today. Apple at 3.2 trillion, Nvidia 2.9 trillion, Microsoft 2.9 trillion, Amazon 2 trillion, Alphabet, Google 2 trillion, silver 1.9 trillion, Saudi Aramco 1.674 trillion. There we have the biddy at number 9, 1.665 trillion. And to wrap up the top 10, we've got Facebook, $1.532 trillion. Our U.S. national debt is sitting at 36,609 billion and change, which equals 107,088 per U.S. citizen, or 323,048 per U.S. taxpayer. And let's take a peek at the chart of the U.S. national debt over the years. So starting in 1966, we see that zero. It was $320,000, if you could believe that, in 1966. And as we go through the years, right when we get to about 2020, we see that same parabolic type straight up indicator right at 2020, where not only did the money printer go brrr, but the U.S. debt also flipped the switch and went straight the fuck up. Check this out. So, and it hasn't really stopped. I mean, you know, before, from about 2008, 2010, we had maybe about a 45% incline, and 45-degree incline, and as of 2020, this is about 60 to 70% Mount Everest style straight up increase. And we've gone from, in 2020, 23 trillion to right now $36.5 trillion. So we've gone up a lot, you know, $13 trillion in about 4 years. So insanity there on the printing. So these are all bullish things for Bitcoin. The more money that gets printed, the less the fiat money is worth, the bigger the distance between the fiat currency and the biddy. I will look for what you guys will love out there, and that is how many Bitcoin it takes to buy the average house. I'm going to find a chart like that. Not today, but I will find a chart. And I know that in 10 years ago, it was thousands of Bitcoin to buy a house. Then it was hundreds of Bitcoin. Then it was dozens of Bitcoin. Now, I think you're talking about, 5 Bitcoin will buy you the average house. So as time passes, your biddy is worth more and more and more. And it's going to get to a point where you'll be able to buy a house with, zero point 0.1 of a Bitcoin. I know it sounds crazy, but the price of biddy continually is going up over the years, and I don't see it going backwards, especially with the way the M2 money supply is going, especially with the way the money printing is going. All it's really going to take, and I foresee this happening shortly, and all it's going to take is a few interest rate cuts, and the biddy will go flying. Once the ISM also goes up, then also a very good indicator right now. If you look at the ISM again, historically, we've got, compared to 2021, we're way down here, right? And traditionally, we're probably looking at, we want it to be around 55 to 65, and we're sitting at exactly 50. So once these indicators go up, we're also going to see the price of the biddy pumping to the moon. Now, we have a great story because the Polymarket bettors, who accurately have predicted many things, including the Trump presidency, when everybody else was saying, Dems are going to win, Polymarket had that pegged bang on. It seems that because people are betting their actual money in the Polymarket, it's a betting site, so people aren't just going to throw their money away. They're going to bet smartly. So the Polymarket bettors say there is a 100% chance that the Feds will end quantitative tightening before May. The Fed Reserve signaled in February that quantitative tightening, QT, may need to be revisited due to the U.S. debt ceiling debate. Bettors on Polymarket believe it's now a certainty that the U.S. Fed Reserve will wind down its quantitative tightening program by May of this year, a move many analysts say could trigger the next leg up for the crypto bull market. By March 14th, Polymarket's betting odds that the Fed would end QT by April was 100%, where it remains unchanged at the time of this writing. The wager, titled "Will Fed End QT Before May?" has more than $6.2 million in cumulative trading volume. And here's the chart, and basically it's, straight across. Once it got to 100 in mid, looks like March, it hasn't moved. It's just completely sideways at 100%. So 100% chance. Will the Fed end QT before May? Polymarket is a crypto-based prediction market that lets bettors wager on real-world events. It rose to prominence during the 2024 U.S. presidential election cycle, where it accurately predicted the ascent of Donald Trump. Quantitative tightening is a monetary policy tool used by the Fed to draw money out of the economy by letting the bonds on its balance sheet mature. It's the opposite of quantitative easing, or the balance sheet expansion that the central bank embarked on the following in 2028 financial crisis. The Fed's current QT regime has been ongoing since June 2022 as a complement to the other inflation-reducing policies. In addition to raising short-term interest rates, there you go, there's the key, guys. The Fed uses QT to raise long-term rates and drain excess liquidity from the market. Although the start of QT didn't prevent stocks and crypto prices from rallying, these markets are coming off back-to-back years of impressive growth. It has become a bottleneck due to the recent macroeconomic shocks stemming from the Trump administration. This was predicted in 2022 by Cambridge Associates senior investment director T.J. Scavone, who said the negative side effects of QT would be felt once something breaks. QT and crypto. Let's get a little further into this. Crypto's strong correlation with the traditional markets exposed the asset class to extreme volatility in February. By March, the S&P index was officially in correction territory, and Bitcoin was down roughly 30% from its January peak. The growing belief that the Fed is ready to wind down quantitative tightening is seen by many as a bullish catalyst for crypto, as a more liquidity will eventually trickle down into risk assets. Combined with rate cuts in the second half of the year, there may be enough policy drivers to reverse the crypto market's multi-month downtrend. This general playbook is supported by crypto analyst Benjamin Cohen, who believes the end of QT will be followed by a broad market rally. Although the Fed hasn't confirmed whether it will wind down this QT program, the minutes of the January-February Federal Open Market Committee meeting revealed that some officials were concerned about balance sheet reductions impacting the government's debt ceiling debate. Regarding the potential for significant swings and reverses over coming months related to debt ceiling dynamics, various participants noted that it may be appropriate to consider pausing or slowing balance sheet runoff until the resolution of this event. This was the Fed's statement. Important policy changes at the Fed are coinciding with the broad pickup in a business cycle. As Cointelegraph recently reported, the U.S. Manufacturer Purchasing Managers Index, PMI, has been in expansion mode for 2 consecutive months following more than 2 years of contraction. During the last 2 crypto market cycles, Bitcoin's peak coincided with the top of the business cycle as expressed by the manufacturing PMI. So this is what we were talking about earlier. So, once this boosts, we're all going to see the biddy pumping. Right now, we're definitely in a low, but we are in the midst of an expansion period. And when this starts to happen, we're going to see Bitcoin probably follow behind, as we see in the chart here. Bitcoin in the orange, the PMI in the white. So we see, as I was mentioning before, a trailing Bitcoin approximately, a couple months after. It's not an exact art, folks, but weeks to months after the ISM and the PMI index increases, we see the biddy not far behind. So here we have the chart. Here we've got the increase in 2020, and then here we have the biddy a few months later. We'll call it 2 to 3 months later, peaking. And then previously we see exactly the same thing in 2017. The ISM peaking, manufacturing going up, the biddy going up, and then additionally in the 2013, 2014, where we see exactly the same thing. And then before that, the chart doesn't go back far enough, but we can kind of get a peak also in 2012. And we see these huge jumps in both the ISM and even more so in the biddy. So, I know everybody's crying, boo hoo hoo, the crash is coming. But the indicators don't talk about the crash coming. The indicators are showing that the expansion is coming. The indicators are showing that there will be a reduction in rates. There will be more money printing. And all these things are good for the biddy. It's very possible that in a few months' time we might be saying, there's going to be a lot of people out there saying, not us, because we knew to buy the dip, right? There's going to be a lot of people out there saying, I could have had Bitcoin at $80,000 and because the price will be, 2, 3, 4, 500 grand. So let's hope that comes to fruition. If we look at the charts and specifically at just the data shows that there's going to be a big hype and a big pump in the biddy. Crypto analysts predict rapid rallies for Bitcoin, and they say the stage is set for altcoins to even dominate the Bitcoin. A closely followed analyst believes Bitcoin and altcoins are about to ignite massive rallies and leave paper-handed investors on the sidelines. Synonymous analyst tech dev tells his 516,000 followers on social media platform X that Bitcoin and altcoins appear to be flashing a technical setup that preceded steep rallies during the 2017 and 2021 bull cycles. The trader shares a chart suggesting that Bitcoin looks poised to shatter the top boundary of its weekly Bollinger Bands as the BTC recovers from a 2025 low of 76,000. The Bollinger Bands are a volatility indicator that can signal a bullish breakout if an asset breaches the upper band. At the time of tech dev notes that the altcoin market appears to be flipping a former resistance level into support amid the correction. According to the analyst, the altcoin market also witnessed similar price action in the last two cycles before sparking a huge burst to the upside. This has always been the setup every single time. BTC hits the expansion line, volatility surges, alts retest yellow, top calls loud, then they get left behind. Market caps grow, psychology doesn't. So here he shows the chart. The analyst says that his stance on Bitcoin and altcoins is supported by his bullish outlook on the liquidity cycle, which tracks the flow of capital in and out of financial markets. According to TechDev, the liquidity cycle appears to be carving a macro bottom, indicating that markets are about to benefit from a phase of monetary expansion. This is what we were just talking about 5 minutes ago. You continue to pin your hopes on the narrative of the month. The cycle is much bigger and does not care. Looking closer at the altcoin market, the trader predicts that alt will outperform Bitcoin in the next leg up based on the cycle of Bitcoin dominance. Measures how much of the crypto market cap belongs to Bitcoin. Stage when altcoins dominate is ahead, not behind. So we've got the bitty dominance up here, the shit coins down here. And before going any further here, I just want everybody to be careful about the shit coinery out there. I've always said it's a good idea to take a huge risk, but it's a good idea only to take a huge risk with a small amount of money, i.e., you have your 95% into something safe, and you've got 5% that you use for shit coinery or you use for very volatile things. And who knows, those very volatile things could actually make you a crap load of money. But imagine putting 95% of your money into a shit coin and then it goes to zero. What happens? Then you're fucked, right? So don't get screwed with shit coinery. Yes, have a little bit left aside for this type of, crazy altcoin style high risk investment, but don't get wrecked. That's my recommendation. A tumbling BTC.D chart in a bullish environment suggests that altcoins are gaining value faster than BTC. At the time of writing, Bitcoin's trading at $83,000. So here he has the chart. So great idea, nice. The altcoins are going to outperform Bitcoin. What else is new? But having said that, there are so many coins that don't exist anymore that existed in the last Bitcoin bull run. So be very careful out there. Only risk in this high risk style what you can afford to lose, and keep the big chunk, the 95%, into something that will last through the cycles, and not wreck you into nothing, i.e. Bitcoin, i.e. Solana, i.e. XRP. These they're not stable coins by definition, but we ideally will see large gains and, of course, large drawbacks in these coins. But, without the drawbacks, you're never going to get the high increases either, right? You've got to take the pros and the cons here. So take care out there with the shit coinery and, be safe. Because there are other assets out there that you probably want to have more of your money into. If you're looking at the crypto market, for example, Bitcoin price eyes $200,000 breakout if this history aligns. Let's go into the story. The price of Bitcoin is recovering from the intense sell-off of the past week, setting a basis for a $200,000 from this historic trends. The price of Bitcoin is undergoing bullish consolidation at the moment after the intense sell-off of the broader market cooled off. The current outlook shows relief for a coin that dropped as low as 76,600 in the past week. Per the historical trend of BTC prices, the consolidation might be a build-up to a massive rally for the top coin. That's right. The institutions are buying the dip. Everybody else is shitting their pants and selling their Bitcoin. The people with the real money, they're buying. They're great. Oh, Bitcoin's on sale. Awesome, right? When writing, the Bitcoin price changed hands for 83,900, up by 1.4% in 24 hours. The coin has jumped from a low of 82,000 to a high of 84,725, a show of brewing breakout. Market analyst Rect Capital analyzed whether this current price is a short-term relief. He spotlighted a trend from June 2021 when the price of Bitcoin was consolidating between 21-week EMA and the 50-week EMA moving average. The consolidation came just after a crash. About a week ago, the BTC price crashed, triggering millions in liquidation across the market. Following this price slump, the coin is consolidating between the same EMA showcased by Rect Capital. In June 2021, Bitcoin prices increased from 33,000 to 42,000. This gave an average price of 37.5. From here, the coin jumped by over 123% to its current price of 83,900. If history repeats, Bitcoin, they wrote a couple of times, may soar to almost 187,000 or approximately 200,000 per coin. BTC price and accumulation trend. According to market data from Glassnode, Bitcoin currently has a high of 0.1 according to the market analyst platform. This figure indicates sustained buying pressure despite the market sell-off. Rather than steer clear of the market, Glassnode hinted that the coin's distribution remains dominant overall. Other on-chain indications also point to reboot from BTC proponents. Into the block data shows a 5.34% surge in large transactions to 34.7 billion. Large transactions in Bitcoin. $34.7 billion, folks. This whale transaction is important as it shows a trend shift among market players that can impact prices. It's also complemented by a 24% surge in BTC trading volume of crypto exchanges and a sign of sustained positive sentiment. What's next for the crypto market? The growth or fall in the price of Bitcoin has a way of impacting the broader market. In an early cryptocurrency price prediction, the impact of Trump and Putin's peace deal over Ukraine was considered. Experts are convinced the broader market may ignite a bullish rally if the conversations turn positive. Although spot Bitcoin ETF market has been showcasing outflows over the past week, the coin is positioned to be the biggest beneficiary in this shift. While the Rect Capital historic forecast teases 200,000, experts like Cathie Wood predict deflationary boom for the market, riding on massive BTC adoption rate by institutions and governments. So, the big boys are still buying the biddy, is what the point of that article was. And they are buying the dip, and, follow the money, folks. If the whales are buying the dip, then we should be buying the dip. If your aunt calls you and tells you, sell your Bitcoin, it's going to fall. No, that's the time to buy. When the prices are down, that's when you're making a good deal. You are making your money on the buy, not necessarily on the sell. And I've said this many times during our broadcasts in the past, that when you're dealing with financial assets, and that includes, Bitcoin, crypto, gold, silver, real estate, these are the things that effectively are going to be holding people's valued assets, right? When you're buying these things, you want to buy these things on a down day. You want to buy these things when the price is low, when the price is on sale. This is when you're immediately going to be making your money. You're not necessarily making your money on the sale. Of course, you sell it, yes, then it becomes a realized gain, right? But you're really making the money on the buy. If you're buying it on the low, then chances are you're not going to have to wait as long to sell it on the high. If you're buying it on the high, you might have to wait, forever for the price to go higher than what you bought it for. Same thing goes for, gold, silver. Same thing goes for real estate. You want to buy your house in the middle of winter because nobody else is buying then. The prices are low. You want to sell your house in spring when everybody's selling their house and there's all these lots of buyers out there ready to bid the price of your house up. Same thing with the biddy. You want to buy it when the price is low, when things are tanking. Bitcoin is not going anywhere, folks. If you buy it today, for example, and we've already gone through the ISM model earlier, we've already gone through the M2 money supply, and the indicators say that, the shit's going to fly. Like, the prices are going to go up. Once this ISM indicator starts to jump, we're going to see the Bitcoin prices also jump, trailing behind just by a little bit. We also had an article talking about the same thing. When the M2 money supply starts to peak, and it's going to get to the point soon where China has to print more money. There's nowhere else for the Chinese to go. Their real estate market's tanking. Their interest rate is at historical low of 1%. They can't lower anything more, right? The only thing they can do is print more money, right? So this is going to start happening. Once this starts happening, all the indicators are basically saying that the Bitcoin price is going to go up. And let's say you buy the Bitcoin today and Bitcoin price goes down, right? All you have to do is wait. Wait through the cycles, wait through the months, and the price will go back up. Warren Buffett talked about his investment strategy and his time horizon, and he said that the normal investor is, there's day traders and they buy and sell often in the same day, within hours, within 2-3 days. The savvy investor, their time horizon is, 2-3 years. And Warren Buffett then said, my time horizon? Forever. So you buy some biddy, the price goes to shit. If you buy 0.1 Bitcoin, you still own 0.1 Bitcoin, even if the price goes to shit. You just wait it out, and the price will eventually come back up. The Bitcoin is not going out of business anytime soon, folks. It's going the opposite way. We have everybody getting on board with the Bitcoin. We have nation states getting on with the Bitcoin. We have United States. Forget nation states. We're not talking El Salvador anymore that can, only buy a few Bitcoin at a time, 10 Bitcoin or 1 Bitcoin, or, their plan was to buy 1 Bitcoin a day. No, the states have 200,000 Bitcoin already. And they're planning to, there's a bill right now saying that's not passed, but it's proposing buying 1 million Bitcoin, right? They created a Bitcoin strategic reserve. Think about it, guys. It doesn't take rocket science. We've got BlackRock, biggest asset manager in the world, who owns, it was 500,000 Bitcoin, I think we read the other day together. So they're smart. They're not throwing their money away. You know what they want? They want you to get out of the Bitcoin so they can buy your Bitcoin. They want us to not have a piece of the pie. So for me, I want a piece of that pie. I want to front run all these people. I front ran BlackRock. I front ran the U.S. government. I front ran Switzerland. So think about it that way. Everybody still has a chance to front run all the institutions. The banks right now are finally going to start being allowed to hold and buy and sell Bitcoin on behalf of their customers. This is coming in the States, coming up soon. It's happening already around the world. There's some financial institutions, banks that will custody your Bitcoin for you and give you a Bitcoin-based loan for a house, right? We've gone through this story before, and think about that, right? So let's say you've got lucky enough to have a Bitcoin, right? 1 Bitcoin. So you go to the bank, you take out a loan on your Bitcoin, 80,000, whatever, 90,000 bucks. You put that as a down payment on your house, right? 4 years down the road, your Bitcoin has potentially gone up to $1 million. You take your Bitcoin back, right? You take the money for your Bitcoin back, $1 million bucks. You pay off your house. So it's a winning proposition. You're going to see more and more of this kind of globally, and we're going to start seeing it a lot more in North America. So more power to the people is the way I see it. And speaking of power to the people, there is money everywhere, folks. There is $900 trillion in assets globally. So money is everywhere. Money is abundant. It's time that's scarce. So spend your time wisely. Spend less money than what you earn. The banks want you to borrow money off them so you can pay them interest. Don't do it. Pay off your shit. Don't owe the bank anything. Spend less money than you earn. That way you will always be in surplus, and it will allow you, if you have debts, pay off these debts. If you start suddenly making more money, whether you have a better job, whether you make some money in investments, don't start spending more money. Start saving more money. Keep your same lifestyle. You don't need to keep upgrading. The richest people in the world, Elon Musk, lives in a modest house. Elon Musk was living in the White House for weeks. He brought in beds for all his people so he wouldn't have to travel back and forth, so he could work late into the, think about it, right? It's just this society's got everybody brainwashed that you need to be better than your neighbor. You need to have, a better car. You need a bigger house. You need better this. You need better that. And ultimately, everybody wants you to buy their shit. But if you think about it, there used to be a day where you'd buy something and it was great and it would last. Now, you replace one piece of plastic crap 3 years later with a fancier piece of plastic crap. Think of that, right? Don't be that guy. Start saving when you're young. Start saving in your teens. Start saving when you're 20. And ideally, you can retire when you're 40 or 45. If you've got a great idea, start today, even if you're not ready. things will come together if you start today, and you'll never live with that regret that I had this great idea, I never did it. It's better to start and fail than it is to never try at all. Folks, I am on the path to have 500 to 1,000 subscribers this year. And remember, in Crypto News Global, you don't only watch Crypto News Global, you are Crypto News Global. So please, if you found this stream enjoyable, share, like, comment, and subscribe. And we will see you on the next stream, folks. Thanks so much for joining.